Hello, today is the 12th day of October 2012. It's a Friday, and this video will have many different markets and time frames. This is what we'll have: copper on the 4-day, the dollar index 15-day, the 3-day Dow, gold on the daily and the weekly chart, the gold to silver ratio 50-hour, pretty much year-to-date chart, palladium 3 different time frames, platinum 3 different time frames as well, and silver on 3 different time frames, which we will start with that of silver. You have a sideways consolidation, uptrend, sideways consolidation. The pattern is fairly simple. Day number 21 of this sideways consolidation, which started, and even you could state this to be part of the sideways consolidation, but I won't because, well, the day before day number 21 in here is when Mr. Ben Bernanke said QE infinity, and it's went sideways in a very not so volatile sideways moving action. I'm still surprised that I'm even saying this right now, but this is what it is. It's also day number 5 of being below this 18 average of lows. It's a front weighted average, just barely hanging on, but still hanging on within the short-term time frame. Again, small support here if it comes. Next level below that is at 31. I think it's very crucial for 30-ish plus to hold. We'll look at that more when we look at the weekly time frame. But before we go there, let's look at the shorter-term 6-hour chart, which gives us the Fibonacci from the time the Fed said yes, QE. There was a movement where it went up like 57 cents in a split second. Because it's interesting news, but hasn't been so interesting lately. Just sideways consolidation. I said yesterday the range of neutrality is between 33 and 2/3 and 34 and 2/3, which we're still in. Yes, it pierced below here as it did back there, but as of now, it hasn't held it yet. It didn't hold it back in here. But obviously, one different pattern to look for when you see something like this is if it goes down, are you going to have continued down movement? Because that's very common when you break key support to have fast moves to the downside. But also, one of the more common moves is if you break it significantly, maybe fiddle around or do something, come back to resistance and start to falter lower. Maybe, just maybe, it's going to test some lower support areas. That 3150 obviously would be the next key level. So let's span this out now to the weekly chart. This level of 33.42, and it's 33.58 on another time frame. Well, what's the best way of putting it? It's 4 weeks of going this sideways movement, and we've seen this before. Here, and here, maybe even a little bit here, definitely here. There was a more choppier sideways movement there, but I guess it's only occurred on the second half of this time frame. But with that being stated, this is test number 3 trying to say, hey, we're no longer bearish from this beatdown that we've had. We're ready to move on forward because you had this spot, you break above it, no, failed breakdown, matching low. And then, okay, look at this. We stabilize for 3 periods, break higher, confirm that we're going here, but we don't because it's a failed breakout. And we're going back again to 26. And now we're back above it again. This is why I say it's very important for 30 to hold. It doesn't have to retrace lower. It could start next week off with a big up move, and if it breaks resistance, I'll be saying, okay, we got levels around 37 and change, and the next level's up towards 39. So that's the next 2 levels, here and here. If, of course, there's a breakout above this particular resistance. And that will be it for gold. I mean, silver. Moving on to gold, that is. So let's take a look at gold on the daily chart. Pretty similar to that of silver. You got the sideways consolidation within an uptrend. So again, gold, we don't know what we're doing because that's what sideways action is. You have an uptrend. We don't know, okay, maybe it's real. If it is, then boom. But we don't know at this stage, or if we did, it would just go higher. But it didn't, or isn't. It is what it is. Again, I'm shocked to say such. We move this on to the weekly. Interesting pattern here. I got Fibonacci from this high, and this low hit a lot of times. This resistance light, it's a similar type of deal with silver for the most part. And again, clear breakout above here. It's looking very bullish, because not only would the next target level be the previous high of 1920, but the reason for taking this out and continuing what bull markets do, and that is making new gains, would be that of expected. Okay, let's move on now to the gold to silver ratio, and we're going to take a look at the pattern I've been looking at for a while now, that's from point A, which is the lows set at the start of the year. This is when gold was, or silver was at 37.5, and the most recent highs on the ratio. And Fibonacci is doing exactly what it's pretty much supposed to thus far. On this occasion in here, there was no support. There doesn't have to be. But if there isn't, there's pretty much rules applied to it, that it's got to find resistance here, or I've gone through 3 or 4 different things that can happen. But when you come up to this level, come back, as you see here, and then a fast move down here, that's exactly a common thing to see occur. So now what we're seeing within this level is this thing just chopping around, doing sideways action. So it's pretty much done what it's supposed to, at least at this point, and there's still more to work within it. But what we've done is say, hey, this is an area for consolidation. Maybe this rally doesn't want to fail, because it needs to hold and stay below this level for it to fail. It's going below it, but it's not holding below it. So, or it's not staying below it right now. And if you have any clear breaks, well, then the next significant resistance mark is towards here. If you go a little bit higher, anywhere higher, and come back, then the odds of taking this level out obviously goes down. And when you can see some sort of nice confirmation break that this level isn't going to hold, maybe some sort of action like this, and then yeah, something like that, you'd be like, okay, it looks like we're going to make a run down for the previous low. That's the type of setups that I'd be looking for. Okay, so that'll be it with the gold charts. Let's move on with the other precious metals now. So let's look at the daily chart for platinum. And platinum and palladium have much different looking charts. So you haven't had that that sideways action since the QE announcement. Rather, you had further upside move, down move, consolidation, and now back down again. So it might be building a cup and handle formation as a possibility. It's always nice, though, when you have a decent correction, you're well above this band, you come back down the band, you stabilize for a decent amount of time, and your next move takes you right up to the previous high, and it definitely barely takes it out. Back down the band again. If it does make that pattern up towards this level here, she's good to go. Now, here's a situation where Fibonacci, I was going to say, and it did, yeah, this is a situation where Fibonacci failed. It doesn't do it often. But situation where we come up here and it didn't find support at this level. And this can hurt on a trading mechanism, or if you're trying to play the risk-reward ratio, because it means that it makes it harder to buy on the dip. It also means that if you're shorting, trying to bet for it to go lower, that your target level was not hit. So as you wait, or you have your order out at, maybe you have an order out for someone to buy your at 1586. Well, it never got there. So that's a situation where it would be a fail. But it doesn't happen often, but it's good to point them out, though, I think. So now that we take a look at this on the daily chart, let's take a look at this from a different time frame. Let's go to the 3-day chart and go back to last year's high, because that's what we're going to do with these charts. We've seen silver and gold from their highs. Silver trying to break out of this level here, gold trying to break out of here. And palladium is trying to break out of its bottom one as well, but it had a larger series of declines. It made a lot of lower lows and lower highs along the way. Well, that pattern's obviously been taken out as it's now made this higher high, higher low, higher high, higher low. We don't know what's next. Maybe this is going to be the lower high that's going to make the next move. And maybe the higher high, or the next high, whether it be lower or higher, hasn't occurred yet. It is stabilizing within this level, very much at an indecisive level just by looking at the chart. On the next time frame will be the 34-day, which will take us back to the 2000 highs. It's got a decent pattern actually, because it's pretty fast move going down. You stabilize, you manage to get up to this fib level. We're not going to make this rally or the sell-off fail yet. Very violent pullback, which was during the 2008 crash. Consistent run up to Fibonacci. Stabilization, clear breakout, and it's had its correction from its breakout. Again, if it needs to correct more, I'd be a strong buyer at the level of 500. But again, on a nice little breakout above this level, breaking past this resistance, probably a test of the most previous highs. Let's move this up, move this on now to did we do platinum the first time? I think we did. Yeah. And I did do the palladium daily chart, but it's pretty much the same as platinum, which is, yeah, pretty much the exact same. I started off with platinum, then I moved to palladium without even realizing it. Okay, well, platinum on the 3-day chart now. Here we are. So now we're looking at platinum, we're looking at the 3-day chart, and this high is from the high of 2011. So like gold, it's trying to break out of the 61.8% test. So all of these metals have that same thing in common on these, from their highs of 2011, of trying to make that selling that occurred from that point a failure, or in silver's and palladium's case, just trying to get out of the bear market for the most part. So that's what that setup is looking like. And platinum on the, because this one should be taking us back to the 2007 highs. Yeah. Violent crash, having a lot of support tests right now. It's looking actually still looking pretty good, but it's really important to really get above this high, even up to 1800, 1775, and then either obviously continue higher or make the higher low. But I do like how it's been holding above this for like 2-3 years now, and still hasn't broken out yet, but it's given us a nice indication that it's going higher. With that being said, when you have a setup that's amazing that fails, watch out for the failed move. I just don't see that failure to occur, but it is something to look out for. Okay, so what's left? I think just the 3 on the top now, which would be copper, the dollar index, and the Dow. So let's just finish off with the metals. Copper from its high, which, by the way, all the other metals like palladium, platinum, and gold topped a little after silver. This one topped actually before silver, but it pretty much just chopped around before its decent sized fall. Since that fall, it's now been stabilizing within the 61.8% very well. Breaking down below here, be looking for a support test here. And breaking above this level here would state that this is a failure, or at least there's a good chance of it, because still got to confirm it. But I'd be looking for this area of 4, which if you look back at its history, it is massive. I think 4 over Trump's 393. So $4 even is the area of support. If we have a clear breakout of the 410s, 420 level, that's the area I'd be looking at for support. Okay, so now let's take a look at this on the Dow Jones. That's, well, all these other metals topped. That's when the stock market bottomed. So to say that the stocks move with the metals, gold and stocks work the same, for the most part, the Dow and the gold is going to go up and down at the same time, that is incorrect. Therefore, what is this market showing us? This market is showing us that the size of these moves are much smaller compared to the size of the ones on the left-hand side, with the smallest ones actually being in here. With that being said, it has cleared past this resistance point and it's finding support there at this level. That's pretty much all you need to know. It's not all that common for moves like this to be failed breakouts, but we'll wait and see. This is a spot if you're looking to wait for the breakout of a level, you want to wait for it to come back. Well, it's came back right now. This would be a time you push the buy button. That's up to you where you put the stop. But remember, failed moves create fast moves, which is exactly why you would place a stop in that level. Final chart is the Dixie dollar index. This is going back for the last so many years, 15-day chart or 1,500 days. Pretty choppy. Pretty choppy. 80 is the level that I've been waiting for to see. If we find resistance at it, I know it's going to be deadly. And, well, it's been chopping around it for decades. Thank you for tuning in. There will most likely not be a chart video this weekend. There might still be possible ones or something like an exotic kind of chart or something I'm not thinking of now that I see on the weekend. But for now, have yourself a great weekend. Bye-bye.